and welcome to the Money Show, your go-to source for smart, practical, powerful financial talk. Whether you are trying to crush debt, build wealth, or just get a handle on your money, you're in the right place. I'm Kavita Thapliyal, and every week we break down the numbers for you, demystify the markets, and give you the tools to take control of your financial future. So grab your coffee and grab your goals, and let's talk money. Today we'll be focusing on your financial portfolio queries, and we'll be doing your financial planning live on the show. So just in case at any point in time you want to send across your questions, you can do that on our WhatsApp number, which is 865-797-4571. We also have an email ID, which is themoneyshow@etnow.tv, where you can send across your questions. And today, to answer all of your queries, we have a live guest with us. We have Nisreen Mamaji, CFP MoneyWorks Financial Services, who will be answering your questions live today on the show. Nisreen, hi, good evening, and welcome to the show. And let's begin. It's going to be a show dedicated to our viewers, and we'll be taking S. George's question. I don't have him on the phone line, Nisreen, but I think you do have his query. And Mr. George says that he wants to invest 50 lakhs, which he's obtained from the sale of a property for higher education of his grandson. The education starts after 6 years. Annual amount needed may be 10 lakhs per year. And he has lump sum investments in some mutual funds. And multi-asset, ICICI multi-asset 10 lakh rupees, I think he's invested in. HDFC Balance Advantage, he's at 10 lakhs, Mahindra Manulife Multi-Cap 10 lakh, and JM Value 10 lakh, DSP Nifty 50 Equal Weight 10 lakh. So I don't have him on the phone line, but hats off to him and the awareness, to plan for his grandson's education much in advance. I think he says that he'll be needing this money after 6 years. Okay, education starts after 6 years. All right. How can he go about it? And also the selection of funds, how do you think that is?
Let me first start by congratulating Mr. George for, thinking ahead, thinking for his grandchildren also. That's a very forward-thinking process. And the funds that he selected also are actually, all 5-star rated. He selected ICICI Multi-Asset and HDFC Balance Advantage Fund. Both of these are in the, dynamic asset allocation category, which will include some amount of equity, some amount of bond, and also some amount of arbitrage or gold, like in ICICI multi-asset. So that will give the portfolio a little bit of stability. Even if there is a correction, these two portfolios will kind of, stay where they are and manage to get him the desired return, and to make sure that the corpus will be available for his grandson's higher education. The Mahindra Manulife multi-cap is typically, a large cap, mid cap, and a small cap, with all the 3 caps 25% each, and the balance 25% will be at the mandate of the fund manager. And so currently it's, it would be 50% large cap and 25% in mid and small cap. And then he's also got the DSP Nifty 50 Equal Weight Index, where the Nifty 50 is equally weighted in, like 2% each in all these 25 to 50 stocks. So that way he's managed his portfolio very well, I must say. Congratulations to him. The only one that I'd like to consider a change is, instead of the JM Value Fund, he can go in for Franklin India Opportunity Fund. The value strategy at this time may not, play out very well. Also, JM Value hasn't done very well compared to its peers. The Franklin India Opportunity Fund will have certain sectoral themes, and which are in favor right now. Probably will have auto, it will have, IT, some amount of pharma, which in the next 3 to 4 years could bear very well on his portfolio. So in the next 6 years, provided that we get a compounded annualized growth rate of about 12%, his portfolio will be worth about 1 crore and 2 lakh rupees. So if he wants to do a 10 lakh kind of a withdrawal every year for his grandson's higher education, I think it will be entirely possible that he can withdraw every year as per his requirements. So all the very
One
best.
question to you, Nisreen, because you said Franklin India opportunities have the theme which are currently running. the volatility that we are seeing in the market is also very short term, and the run up that we've seen in the selected sectors that you also mentioned that Franklin India Opportunity has. Uh, 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 we all have we know that it's a 90-day pause that we've got, and the situation is still very uncertain. So what will happen as far as auto is concerned? What will happen as far as US facing stocks, especially pharma? There's a lot of uncertainty on those grounds. Does it make sense to shift now? Because if Franklin India Opportunity has a higher exposure to a sector like pharma, we are yet to see things, finalized for this particular sector also. We still don't know how is it going to turn out to be. So when this change should be done by George, should he be waiting now, or if you are recommending an exit, it could be in a large cap, on a different large cap?
So the thing is that these kind of sectors are also there in the Mahindra Manulife multi-cap as well as in the DSP Nifty 50 equal weight index. So it's not that these certain sectors are not already present in the portfolio. The only reason that one mention is that you will be moving out and entering at about the same index level. So obviously, one would advise that Mr. George doesn't sit on cash. If he was to make this move, then not to redeem and sit on cash and to wait for an opportune time to enter, because one can never time the market. It's like a falling sword or a rising bullet. One never knows, prospectively what is going to happen. So you're always advised to enter at the same time that you exit so that you have, captured those
So
stocks.
if these sectors are already there in the funds that he already mentioned and he has in the portfolio, can he look at some other sectoral exposure which might be missing in the fund already, in his portfolio already?
See, as a theme, value is not going to play out. So that's one of the reasons that one
Sure.
was and I recommended that you exit out JM value. Also, among the value funds, JM value hasn't performed that very well. So if you were going to pay the capital gains and you're prepared to do that, then this would be a right time to go about it, because you see that we are still in the correction process and we haven't moved up drastically. So if you were to make any changes, this would be a good time to do it. And if you don't want to pay the capital gains and you
Cap.
feel that this particular fund,
Right.
is kind
Right.
of you're managing your goals, then you can also
So
stay. Both the choices are available to you, Mr.
what
George.
about a pure mid cap or a small cap? Entry time over here would be good?
Since your goal is only about 6 years away, and the mid caps and the small caps already played up to a large extent, the prices have already gone up. Therefore, I would suggest that you go in for a multi cap kind of a portfolio or a flexi cap. So a flexi cap with a larger weightage towards large cap would also be a great idea. So you can also consider HDFC flexi cap, as part of the portfolio if you want to play it a little more safer and not go in for an opportunistic fund like the Franklin India Opportunity Fund. A flexi cap fund, which is more skewed towards large cap at this point, also will make a lot of sense. So you have all these options available to you. But yes, you could consider making a change now rather than waiting for it later. But do remember that capital gains would have to be paid, once you make a redemption. So keeping that in mind, your goal is about 6 years away. So mid cap, a pure mid cap or a pure small cap is not, suggested at this point.
All right. That's the recommendation on Mr. H. George's portfolio. Let's take Subramaniam Pichai's question. He says he's 60 years old, currently retired with a pension of 20,000 per month and no other income source. He's got a health cover for 20 lakh and mutual fund portfolio corpus worth rupees 1.2 crores. Four flexi cap funds he has, and monthly expenses are about 50,000. He wishes to redeploy 1.2 CR to get regular income of 50,000 for next 25 years. Interesting. I again don't have him on the phone line, but he's very clear about his requirement. I don't know from when would he need that 50,000. Is it immediately after he deploys, or is there going to be a time period where he would let that money grow or stay invested? So that time frame is still a confusion for me. And but apart from that, I think you've got all the details, in order to guide him for an SWP.
Sure. So since, I mean, I'm assuming that, you've already stayed invested in the flexi cap funds for a certain number of years. And, the exit loads obviously will not apply anymore, because you would have completed at least 1 year of waiting period in all these flexi cap funds. And you have a corpus of 1.2 crore. You're very clear what your SWP is. You want about 6 lakhs a year. So assuming your portfolio grows at about 9%, and the inflation rate is about 5%, year onwards, because obviously inflation will continue to apply to your, portfolio as well. Your withdrawal at 6 lakh rupees, and at the end of 25 years, for your estate planning and for your inheritance that you would like to leave your children, you will still have approximately 1.8 crore, in the corpus. So since you've already done all the fine tuning, you've, invested during your retirement years, FlexiCap was a beautiful choice for you to invest in. You have the corpus, and now you're looking forward to withdrawing, very sort of comfortable amount, which is 50,000 rupees, what you've said. In case you're a little bit flexible about leaving the inheritance to your children, every 3 years, you can also factor in, increasing your withdrawal by about 5%. So that could be another choice also, because, 50,000 today per month and 25 years later, there's a vast difference, because the purchasing power of the 50,000 also would have changed. So, I would definitely suggest that you don't stop at 50,000. Every 3 to 4 years, you kind of increase that amount also, so that you are keeping pace with inflation. But it's very important for you to, keep a track of your portfolio, review your portfolio, and make sure that you are on the right track, so that in case the market is, corrected or gone up, both of these things you are aware of, and you can adjust the, withdrawals to make sure that your portfolio will be within, an amount that you can withdraw, and that you should not fall below principal. So keep a track of it, and all the very best, and in your retirement years, Mr. Subramaniam.
One very interesting thing in his question was he invested in 4 flexi cap. Now, as far as the flexi caps available right now are concerned, Nisreen, most of them are very large cap biased. Do we really have 4 flexi cap with different kind of strategies, or maybe different exposure to market caps?
So not really. I mean, since Mr. Subramaniam has already done his planning, so the
Yeah,
way that you
yeah,
do it,
yeah.
your accumulation phase is from, say, 25, when you get your first paycheck, to about 60. So that's your accumulation phase, which is about 35 years. And then you have your deferment phase, which is the next 25 years of your life. So the planning typically
More in the
happens in the
context of
first
guiding
35.
someone if they want to have more than one flexi cap. This question was more in the context for guiding someone who wants to have more than one flexi cap, and they think that maybe this, these 2 flexi cap would have different strategies. Otherwise, you would be just repeating, or duplicating your investment,
Yeah.
which is why. Yeah,
There will be duplication of stocks and
yeah,
strategy, because FlexiCap as a
yeah.
category is, pretty much similar, and you will definitely, have you'll probably have the same stocks in your portfolio. But now that that part is already done, we can just hope for the best. So for anybody else, watching the show, when you're planning your retirement, you obviously should make sure that you have at least 4 different categories. So you can have a dynamic asset allocation category, like a balance advantage or a hybrid equity, or then you can have one multi-cap, a flexi-cap, and then possibly, 5 to 10% in some kind of a theme, which will give you that little bit of edge, or, push your portfolio to slightly higher returns if the term is longer. So you can't follow that strategy. Somebody who's very risk averse can just stay within large cap and flexi cap categories only, and have at least 50% towards the dynamic asset allocation, which is, say, a multi-asset, a balance advantage, or a hybrid equity. So depending on how much volatility you can take, that's how you can plan your portfolio. But definitely what Kavita said is absolutely true. There will be duplication in Mr. Subramanian's portfolio. But having said that, you're already in the deferment stage. So all the very best.
All right. Let's move on to Mansa's question. And she has HDFC FlexiCap, HDFC Midcap, HDFC Retirement Saving, ICICI Pru, Blue Chip, and Multi Asset. 1,000 each in these funds. And then she has Kotak Emerging Equity, SBI Focus, 2,000 each, SIP going on, and SBI Small Cap. And she's just 25 years old, and beyond that I don't have any other details. I'm just assuming that she's got a longer time frame, because she's just 25, and hats off to her. She thought about her investment, and she selected the country's best AMCs also. I hope it's not a random recommendation. I just hope she's researched well on that, because the fund choice it looks good, but then I don't know if she really should be elaborating so many funds in the portfolio, you know, such an elaborate portfolio, because the cost, the amount of investment is also not too much. I mean, this entire amount can be divided into maybe just 4 or 5 funds. So yeah, how can she consolidate? And assuming that she has a longer time frame, you know, maybe 20 years from now, what kind of corpus do you think she can accumulate with this kind of investment amount?
Sure, sure. So yeah, I mean, it's good that Mansa, you started thinking about retirement because you also have HDFC retirement savings in your portfolio, and that's fantastic. That even at 25, you know, you are thinking long term, and you managed to save to 10,000 rupees a month. So as Kavita rightly said, you know, you don't need to have so many funds in the portfolio. You can consolidate to some extent. So therefore, you can stop ICICI Prudential Blue Chip 1,000 rupees and add that SIP to your existing SIP of 1,000 HDFC FlexiCap. Same with ICICI Prudential Multi-Asset. You can add that 1,000 to HDFC Mid-Cap. So that way, you know, you will just reduce 2 funds and you will have about, then also you'll have about 6 funds in your portfolio. So, you know, when you consolidate, what you need to understand is try to have 4 to 5 categories and not too many more, you know. So you can have 1 small cap, 1 mid-cap because you're investing for the longer term, and 1 multi-asset, and possibly 1 flexi-cap, and, you know, you're good to go. So don't keep too many choices in the portfolio. You can keep a multi-asset if you feel that during the next so many years, you will need some liquidity, you know, because a multi-asset can help you with your liquidity. It won't move, you know, as the indexes move, and therefore you will get some amount of reduction in standard deviation of volatility and the liquidity both. Also, one can, you know, suggest that you increase your SIP every year by 10% by doing a step-up SIP. So that way, you know, your corpus will be much larger. At this point, if you calculate after 10 years and at 12% compounded annualized growth rate, your corpus will look like about 23 lakh rupees. But if you keep on adding on by doing a step up, your corpus will be much larger. So keep that in mind, and, you know, try to reduce the number of funds at any point of time. So 2 changes that can be made, I've already suggested to you. All the best.
All the best to Mansa. Let's take Ramesh's question. And he says that he has 5 lakh to invest. And yeah, for that, what will be a suitable investment plan? Again, I'm short on details for how long, what's his risk appetite, what is his age, and why he needs the money, or what he exactly needs in terms of corpus. Assuming again it's a 5 years plus time horizon, Nisreen, what kind of risk can he take right now?
Sure. So one can recommend that, you know, you invest about 250,000 rupees in Nippon India Flexi Cap Fund, 75,000 rupees in ICICI Pru Nifty 50, 75,000 rupees in HDFC Balance Advantage category, and in a Sundaram business cycle, you invest about 100,000 rupees. Since your goal is about 5 years away, this can give you a nice, you know, kind of a consolidation, and also some amount of liquidity, because we've suggested an index fund and a balance advantage fund, about 150,000 rupees combined, so that if there are some liquidity constraints during these 5 to 7 years, you would be able to, you know, withdraw from there. So in 5 years, you have already got 55 lakh rupees, plus you're doing a SIP of about, plus you want to add another 5 lakh rupees. So your corpus would be about 1 crore after 5 years, provided that we get a compounded annualized growth rate of about 12%. So of course, it's important for you to keep a review of the portfolio to make sure that the 12% is deliverable or not deliverable. And then, you know, you can adjust your requirements. But about 1 crore is what you can expect in your corpus after 5 years.
All right, so these are the funds recommended, and yeah, if at all anything more, if needed, in terms of recommendation or solutions, maybe Ramesh can send us more details. Let's move to Ananta's question. And Ananta is almost 32 years old, 20 years investment planning. And what's the corpus that he can accumulate with the current investment? So 2,000 rupees each in SBI Focus, Tata Small Cap, and Parag Parikh Flexi Cap. Good funds, but what will be the corpus?
Sure. So I'll give you a little idea on each of the funds because I think you asked for the recommendation. So SBI Focus Fund, it has about, you know, about 81% investment in domestic equities, of which about 35 or 36% is in large cap stocks, 18% in mid cap, and about 3.7% in small cap stocks. And we have about 1% in debt, So out of which 0.22 is in government security. So this is how the SBI Focus Fund is placed. It probably has about 20 stocks, 20 to 25 stocks in its portfolio. So there you're following a very focused strategy, very similar to even like a PMS in SBI Focus. In the Tata Small Cap Fund, focuses on buying businesses which can grow over the next 3 to 4 years, along with focusing on strong balance sheets which are available at reasonable valuations. So that's where a small cap fund will move into, say, a mid cap or a large cap category, and there you will be able to see the value realization over a slightly longer period of time. And with Parag Parikh Flexi Cap Fund, it hopes to achieve a long-term capital growth by investing in a diversified portfolio of Indian as well as foreign equities, as well as in debt schemes. So this fund has the flexibility to move across large cap, mid cap, and small cap, offering investor exposure to various market segments. So this is a small, recap on what these three funds are all about. Now you're investing about 6,000 rupees across these three funds, and the future value of this, of 6,000 rupees SIP after 20 years, provided that you get a compounded annualized growth rate of about 12%, would be approximately 59.35 crores. So you're looking at about, 60 lakh rupees, not crores. I made a mistake there. So you're looking at about 60 lakh rupees in your portfolio if you invest 6,000 rupees per month over the next 20 years. And we are looking at getting a growth rate of about 12%. So all the very best to you, and wishing you all the best in your investment journey.
Okay. Let's move on. Let's take Tarun's question. And he says that he wishes to create wealth of 3 to 4 CR in 12 years, ready to invest 50,000 each month, and which he will step up by 10% every year. And for that, he needs good mutual funds from you. So quite an aggressive corpus, but even the investment amount is good, which he's also planning to step it up. So yeah, what kind of funds would you recommend? Again, a very aggressive strategy.
So Tarun, since you are hoping to achieve at least 3 to 4 crore in 12 years, so therefore I will suggest a very kind of an aggressive strategy for you. So for the SIP, you can invest Nippon India Flexi Cap about 20,000 rupees, Invesco India Mid Cap about 15,000 rupees, and Nippon India Small Cap also for about 15,000 rupees. So you have a Flexi Cap and a small cap from Nippon, and from Invesco the Mid Cap Fund. So that way you are investing 50,000 rupees over the next 12 years. Now to reach 3 crore in 12 years, your typical SIP, if you compound at 12% growth rate, should be 62,000 rupees. So you are a little short of 12,000 rupees. But if you cannot increase your SIP, then you can do a 50K SIP and a 10% step up every year. That way your corpus will be about 2.4 crores at the end of 12 years. Alternatively, you can extend your time frame to about 14 years, in which case your corpus will be close to 3.5 crore. So, you'll be close to your targeted, corpus that you require of between 3 to 4 crores. So either you do the step up SIP, in which case also you are going to fall short a little bit of your 3 crore target, or you increase your SIP to 62,000 rupees, or you increase your tenure to 14 years. So please see what is comfortable for you. And, all these funds are, pretty good in their categories. And I'm sure that you will be able to achieve your desired goals and ambitions. All the best to you, Tarun.
Sejal's question, and she's 25 years old, and she she will invest 50,000 lump sum in the funds that she's shortlisted: Mid Asset Large and Mid Cap, Parag Parikh Flexi Cap, ICICI Pro Blue Chip, and HDFC Balance Advantage Fund. She wants to accumulate a good corpus, or in fact, how much can she accumulate as corpus in 10 years is what she's asking also.
Okay. So what you can do is you're putting lump sums, and you can, substitute the Mirae Asset Large and Mid Cap by Mahindra Manulife Multi Cap Fund. Then you can invest in the Parag Parikh Flexi Cap Fund, 50,000 rupees. ICICI Pro Blue Chip, 50,000 rupees is okay. And HDFC Balance Advantage Fund, 50,000. So this is how you're investing your lump sum of 2 lakh rupees. And you can expect to get about 6 lakhs and 6.2 lakhs in about 10 years, provided that your growth is 12% compounded annualized growth rate. So these are the funds, and you can definitely go ahead. One recommendation to switch the Mirae asset with Mahindra Manulife Multi-Cap Fund. So all the very best, Sejal. You're 25, and you have selected to invest in great mutual funds. You've started your investment journey, and you managed to save 2 lakh rupees, which is also very commendable. And I'm sure you will keep on adding to the mutual funds, and make sure that your investment journey is beautiful. So all the best to you, Sejal.
All right, with that, it's a wrap on the show as well. Thank you so much, Nisreen, for taking time out and helping our viewers with their financial portfolio. And for the viewers, I'm going to leave you with our WhatsApp number and email ID where you can reach out and send your questions, and we can do your live financial planning on the show. Thank you so much for watching. Goodbye.